Most experts believe next year will be another stagnant year in housing, with a true recovery not expected until 2012. Ed Jacob, Executive Director of the Neighborhood Housing Services of Chicago, is here with his market outlook. Welcome, Ed.
Thank you.
Good to have you. So let's talk about the spike in mortgage rates, upwards of 5% according to Bankrate, a dramatic jump even over the past 4 months, but it's not prompting potential home buyers to get off the fence.
Not yet. They're still sitting on the sidelines, still some concern about confidence. Really the question of confidence. Also, the challenge is that as people apply for loans now, the credit has been damaged. Across income levels and across geographies, people's personal credit scores have dropped over the last couple of years. So while we've got really good lower property values, decent interest rates historically, you would hope that that little tick up in rates would allow people to say, I'm going to get in the market now. Not seeing it, unfortunately.
It's become irrelevant, these low rates. In the meantime, we get big foreclosure news this week. A drop in foreclosures last month. The number of filings down by 21% compared to October, down 14% versus a year ago. But what do you really think about these numbers?
I wish that was great news. Unfortunately, I don't think it is. We've all heard the news over the last couple months about the Robo signers. What it really has done is put a delay on those foreclosures. They haven't moved through the pipeline. The drop that you've seen is really an artificial drop. What you're going to see then is that pipeline beginning to flow again as banks clean up their processes, clean up the certifications on the Robo signings. That'll get pushed into the first quarter of 2011. So you're going to see lower foreclosure numbers. People may interpret that as a good sign. I wish it was. Unfortunately, we're just going to push that into next year.
And we're going to be seeing higher foreclosures in 2011 is your prediction?
Exactly. I think we'll see up north of 2 million next year.
Okay. What is that going to mean for home prices? Because Moody's is estimating that we're going to see home prices fall into mid-2011 or until mid-2011.
Right, and I think that'd be an optimistic scenario. If prices could begin to recover by mid-2011, I'd be happy with that. Certainly geographic variation here. Look at the Sand States, look at the Midwest, look at the hard-hit Midwestern industrial cities, Cleveland, Detroit, places like that. You've got quite a bit of variation, but if things level off and if we saw upticks in the second half of 2011, I'd see that as good news.
Then what is more realistic in your
Realistically,
opinion?
lower to flat, and flat lower, the first 6 months continued flat into early probably 2012 in my mind.
Okay. Let's talk about the president's loan modification program. This week, the Congressional Oversight Panel called it a failure. The HAMP program preventing only 700,000 foreclosures when the goal was to prevent 3 to 4 million. Now, you're a housing counselor. You work with everyone on the ground floor. What do you think about this report?
Right. HAMP, we had some initial successes with HAMP, which were good, but overall I think it's been disappointing, the progress that we've made with that program. HAMP was really designed to work with mortgages where mortgages were poorly written, where they were going to reset. You can play with the amortization, you can stretch out the amortization, you can play with the interest rate, but it didn't really deal with the fundamental problem we have now, which is unemployment. How do you modify someone's mortgage when they don't have a source of income? And so HAMP wasn't really designed for that challenge. We're 9.5%, 9.6% unemployment. In 2011, a new program will roll out in states with high unemployment called the Hardest Hit Funds, HHF. Hardest Hit Funds is really a program designed to deal more with the unemployment challenge. The change in the people that we've seen at Neighborhood Housing Services, initially 2 years ago, it was people with poorly written loans. Increasingly now, it is people who are unable to pay their mortgage because of unemployment.
Do you think this Hardest Hit program is really going to make a difference?
In those states, I think for people who are less than 6 months delinquent, if we can catch them early enough in the process, I think it can have an impact. It recognizes the fact that people don't find a job in 2 or 3 or sometimes 6 months now. Sometimes it really takes 9 or even 12 months in this economy to find a new job. I'm a little bit hopeful, at least, that that'll assist some people who are struggling with their mortgage.
Okay, let's hope for some success with that. Thank you very much. Ed Jacob, he's the Executive Director with the Neighborhood Housing Services of